Did you know the IRS actually pays you interest when they owe you money? If you've overpaid your taxes or are waiting for a refund, you could be earning interest every single day, but only if you know how to calculate it correctly. Let me break down exactly how IRS overpayment interest works and why you need to understand this calculation. First, let's understand what qualifies as an overpayment. Under IRC Section 6401, an overpayment occurs when your tax payments exceed your actual tax liability. This includes excess withholding, estimated tax payments, or credits that create a refund situation. Here's where it gets interesting. The IRS doesn't just hold your money for free. Under IRC Section 6611, they're required to pay you interest on overpayments. But there's a crucial 45-day grace period. For individual taxpayers, interest starts accruing 45 days after the later of your return's due date or the actual filing date. Now let's talk about the interest rate. According to Revenue Procedure 2024-40, the IRS adjusts interest rates quarterly based on federal short-term rates plus 3%. For 2025, these rates can change every 3 months, so staying current is essential for accurate calculations. The calculation itself follows a daily compounding formula. Here's the basic structure. You take your overpayment amount, multiply it by the applicable interest rate, divide by 365 days, then multiply by the number of days the IRS held your money beyond the 45-day period. But here's what most people miss. The interest calculation stops on different dates depending on your situation. If you're receiving a refund, interest stops on the date the refund is processed. If you're applying the overpayment to next year's taxes, it stops on the due date of that return. Let me give you a practical example. Say you filed your return on March 15th with a $2,000 overpayment, and the IRS processes your refund on July 1st. The interest-bearing period starts 45 days after April 15th, so May 30th, and runs until July 1st. That's 32 days of interest at the current rate. If you want an easy and free overpayment interest calculator, visit taxfintools.com and get your interest estimates on overpaid taxes. Here's a critical point many tax professionals overlook. The IRS uses a specific calculation method that differs from simple interest. The daily rate is calculated precisely, not rounded, which can affect larger overpayments significantly. For business taxpayers, the rules are slightly different. Corporate overpayments earn interest starting 45 days after the return due date, but the rates can vary based on the size of the corporation and the amount of overpayment. One important limitation under IRC Section 6611, you don't earn interest on overpayments caused by certain credits, like the Earned Income Tax Credit or Additional Child Tax Credit. The IRS treats these as payments made on the return due date, regardless of when they were actually processed. If you're dealing with amended returns, the interest calculation becomes more complex. Interest on additional overpayments from amended returns typically starts 45 days after the IRS receives the amended return, not the original filing date. Here's a pro tip. If you're consistently overpaying through withholding or estimated taxes, consider adjusting your payments. While the IRS interest rate might seem attractive, it's typically lower than what you could earn through other investments, and you're essentially giving the government an interest-free loan during that 45-day period. The key takeaway is this. Understanding IRS overpayment interest calculations can help you make better tax planning decisions and ensure you're receiving every penny you're entitled to when the government owes you money. Are you leaving money on the table with your tax overpayments? Don't let the IRS keep your hard-earned dollars longer than necessary. Make sure to share this video with anyone who might be dealing with tax overpayments. Hit that like button if this helped you understand the process better, and subscribe to IRS Tax app for more money-saving tax strategies delivered straight to your feed.